incredible amount of news. Every week I struggle to get it all in, but it makes for a wonderful banquet of information, doesn't it? Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli, and there is a ton to get through. Let's start very quickly with some breaking news, courtesy of Javier Blas on Twitter. Mining firm Anglo American announces a major shakeup of its portfolio. Anglo plans to divest or demerge its De Beers diamond unit plus platinum, met coal, and nickel. Importantly, Anglo will all but stop investing in its Woodsmith fertilizer mine in 2025 and 2026. And if you're wondering about that, by all means, go 2 or 3 weeks back. We did a in-depth special with Mining.com editor Cecilia Jamasmi, really to set the table for this massive story of BHP attempting to acquire Anglo American with a whole bunch of qualifications within that statement. So, breaking news there. We're going to take a look at a few stories to get us up to date in the news section, but I thought we could start there. Anglo plans to divest or demerge its De Beers diamond unit plus platinum, met coal, and nickel. So it's an interesting question because they met with the South African authorities just under a couple of weeks ago now. The Anglo American CEO and BHP's Mike Henry, and South Africa is also heading into an election. So it does make you wonder if they're making a preemptive move before the government can say no. Can they say no to Anglo American divesting of these assets? Kind of interesting. And it does simplify what is arguably too complex of a deal. And a couple of people comment on that. Like, it's actually, I would argue, it's too complex. So maybe this also helps move this deal forward in a practical way. So we will go more in depth in the news section. Also, gold stocks continue to consolidate at these higher positions. Agnico Eagle really showing some strength, just under $100 on the Toronto Stock Exchange, now at $92.63. And so interesting moves with Agnico. You see the gold miners ETF GDX at $34.95. Again, at the end of February, we're at $25.78, the last bottom. And so up a fair amount, you could say, up at $34.95. Looks like a bit of a bull flag, frankly, for about a month. So really kind of looking like it wants to break out higher, though. It's at the top of that kind of bull flag range, for lack of a better term. Again, I am not a technical analyst, but in a sense, being in this business long enough, you kind of become one by default. Same thing with GDXJ, the juniors, the main ETF there. We see bottoming out February 28th at $31.20, now at $42.90. And again, at the top of this bull flag range, looking like it wants to bust out. And so gold stocks looking very interesting, not financial advice, of course, but looking strong. And so interesting as gold continues to trend sideways. Now, we have some more breaking news here from CNBC. President Joe Biden is raising tariffs on $18 billion of Chinese imports, EVs, solar panels, batteries, and more. And I think those are the three big ones. Electric vehicles, as we've been following this story for a few weeks now, electric vehicles, solar panels, and batteries. So just a couple of points here since we've been following this story quite closely. President Joe Biden plans to impose a 100% tariff on Chinese electric vehicle imports, a 50% tariff on Chinese solar cells, and a 25% tariff on certain Chinese steel and aluminum imports. And we just had the LME sanctions on Russia basically saying you can't trade in Russian metal after, I think it was April 12th. And so it's going to be interesting what happens with supply, because we're seeing what's going on with copper, which is where I'm going to go next. But let me just add a couple more points. The announcement comes after weeks of White House officials warning Beijing to amend certain trade practices that Washington argues have weakened global supply chains. Administration officials predicted that these tariffs will have, quote unquote, no inflationary impact. So interesting developments there. I think everybody had a sense that some sort of tariffs were going to come in. 100% is pretty dramatic. But again, when we're seeing cars that are selling, I think in the Chinese market for $9,700 US, you even start to wonder if 100% tariffs are enough. I imagine they are to discourage purchasing. So that has come to fruition. Now, turning to the copper market, we have all sorts of interesting developments here. There is a tweet on X that I wanted to start with from an account called Brandon Balo. And I'm not sure who this is. They have quite a few followers, and it just says writer, investor, apparently 75,000 followers, but you never know if that's actually real people. Just to give you the profile, but interesting tweet. Looks like copper TC rates just went negative. Absolutely wild. Now, Robert Friedland was also commenting on this. On his account, record low copper TC/RCs push miners to agree for very long-term deals. Now, if you're wondering what TC rates are and you're not neck deep in the copper industry, I checked with ChatGPT so that we could get a good explanation. And I also want us to recollect last week when we had Roberta Caselli, investment strategist from Global X ETFs, on the program, I was asking her about these smelter fees and the mechanism by which this works. And ultimately, the idea is the less supply of copper that is on the market, the lower the smelter fees go because there is less metal to be processed. Therefore, smelters, one assumes, are in competition to get whatever little business they can get, right? So now we have this account, Brandon Balo, showing a very convincing chart in Chinese with a graph on it showing that these TC rates, which are treatment charge rates, have gone negative. Now, here's the definition of treatment charges. So TC means treatment charge and RC means refining charge. And let me quickly give you the definition because you may be seeing this and nobody's really explaining it that I saw. So let me help out here. This is ChatGPT. Treatment charges are a significant part of the copper industry's pricing structure, influencing the overall profitability for miners and smelters. When ore supply is high and smelter capacity is underused, treatment charges, TC rates, might increase as smelters compete for business. Conversely, if ore supply is tight, miners have more leverage, potentially lowering the treatment charge or TC rates, right? Exactly as we were learning last week. And let's not forget, I asked Roberta, as an investment strategist, I said, theoretically, if I was a copper analyst, then I would want to be looking at the smelters as a clue to see how strong or weak supply is that's coming on the market. How much is coming on? It's kind of a pretty important variable. And Roberta said, yes, you would want to be aware of that as far as understanding what is happening in the copper market. So again, I go back to this post here from Brandon Balo. Treatment charges have gone negative. So if true, this would suggest that smelters are actually paying to smelt copper, which would suggest that copper supplies are very, very low, one would assume. And so just a little bit more on RC. So we learned TC is treatment charge. RC stands for refining charge, and we're back to ChatGPT. This is a fee charged by smelters to cover the costs associated with refining copper concentrate into pure copper metal. Similar to treatment charges, TC, refining charges, RC, are part of the commercial agreements between mining companies and smelters. The TC-RC terms collectively represent the total costs that miners pay to smelters to turn copper ore into usable metal. These charges are critical in the copper industry's pricing and operational strategies, with fluctuations influenced by market supply, demand, and other economic factors. And so, again, Robert Friedland's account tweets out May 13th, record low copper TC/RCs push miners to agree to very long-term deals. And the story that Friedland linked to is on fastmarkets.com. Record low copper TC/RCs push miners to agree to very long-term deals. So it looks like as a result of these very low fees, miners are trying to take advantage and saying, hey, what's the longest I can lock in these very low treatment charge and refining charge fees? How long can I get this price? Here's a subheadline. Recent weeks have seen a significant number of miners agreeing sales of copper concentrate to traders for 1 to 4 years of supply, Fast Markets has learned. And we have a quote from one unnamed source in the article. Quote, there are some big supply volumes in several tenders ranging from 50,000 and 100,000 tons of units for 2025 and 2026, and some are even selling tonnages for 2027, end quote. One miner was said to be selling tonnages as far ahead as 2028, with some smaller and medium-sized miners selling more than 1/3 of their production for those years. Quote, we were inundated with offers. People were very aggressive with their bids, end quote, one miner told Fast Markets. And the miner continued, quote, opportunities like this don't last long, end quote, noting that it was taking advantage of the current situation. And we have a second source here, finally, in the article, quote, the current TC numbers is extremely low and unsustainable. So miners are incentivized to sell forward to lock in profits from record low TC figures, end quote. So pretty interesting developments there. One can only imagine this is bullish for the copper market. Now, just on Robert Friedland, there is a website that I follow that looks amazing, but it's thousands of euros a year to subscribe. I may reach out to them. They're called africaintelligence.com. I'm going to reach out to them to just see if I can get a better deal on the subscription because, sharing their website with a different audience that may be quite interested. Here's the headline. Mining magnate Robert Friedland's fall from favor in Guinea and Liberia. And you get 2 sentences of the article, which is quite provocative. The North American tycoon no longer has privileged access to presidential palaces in West Africa. In West Africa, not just one country. And his ambitious projects have been sidelined. Guinea junta leader Mamadi Doumbouya and President Joseph Boakai of Liberia no longer believe in his plans. Period. And that's where it leaves off before I need to spend thousands of euros to read the rest of this story. So I'm going to reach out to them because I think there could be mutual benefit to me sharing the odd story with this audience for africaintelligence.com. Continuing on the copper story, legendary investor Stanley Druckenmiller says copper is a great bet for the next 6 years because EVs, data centers, and missiles all depend on it. So we've heard this before, this, rationale, EVs, data centers, war, but it's interesting that Stanley Druckenmiller is making the case. And here, this is businessinsider.com. Copper prices are set to rise over the next 5 or 6 years as demand outpaces supply. And it says that Druckenmiller initiated a new position in copper miner Freeport-McMoRan in the 4th quarter. So this is all coming from a CNBC interview that Business Insider is quoting, and I have the CNBC interview, but they watched the whole video and quoted from it, which is very helpful. So here's just a couple more quotes from Druckenmiller. Quote, copper is a pretty simple story. It takes about 12 years greenfield to produce copper, and you got EVs, the grid, data centers, and believe it or not, munitions. These missiles all got enough copper in them, and the world's getting hot that we just think the supply-demand situation is incredible for the next 5 or 6 years, end quote, Druckenmiller said in the CNBC interview. And if you're at the Northern Miners Symposium that we had in London, you would have heard this from Robert Friedland back in November. The importance of copper and nickel in these weapons. Growing demand for copper from defense industries appears especially timely given the $95 billion aid package that the U.S. recently approved for Ukraine, Israel, and Taiwan. Another quote from Druckenmiller, given the move towards EVs, given the usefulness of it in infrastructure spending, it's hard to believe copper won't be a huge beneficiary. The question is, when am I supposed to buy it and how big is the exposure? And then they have a quote from 2023 at the Sohn Investment Conference where Druckenmiller said copper was, quote, in the tightest position, well, frankly, I've ever studied. So I almost want to say the ghost of Jeffrey Curry, no longer head of commodities at Goldman Sachs, must be, even though I'm sure well alive, but just perhaps a little early. One wonders if him being too early is the reason he's no longer head, because Jeffrey Curry was saying this, since I think 2021, if not earlier. And I heard an interview with Jeff Curry maybe a year and a half ago, and the idea from Jeff Curry I thought was quite interesting. He expected copper to pull an oil, as he put it, where oil went from $10 a barrel to $150 in the early 2000s, as far as I remember the quote, and he expects a similar move out of copper. And here copper is at Let's just look now, $4.84. And the resistance really, the all-time highs is around this $4.90 to $5 mark, depending on whether you take intraday and all this sort of thing. So all to say, I think the main resistance is between this kind of $4.80 and $5 mark. The technicians expect a bounce down off of this resistance before maybe moving up again, because of course it is quite, one imagines, strong resistance. But let's see. Again, not financial advice, just what people are saying. So copper with another strong day here at $4.84. So just a few headlines here before we move to our CEO Spotlight with Ken Conkin of Tudor Gold, which is fascinating, formerly of Pretium. Very interesting story, very interesting project that Ken is working on. So we're going to get to that right away. And we're also going to have a in-depth interview with Hugh Agro of Revival Gold on his perspective on mining in the United States right now. What is the landscape? What's going on legislatively? How easy is it to get things done compared to before? Are there any major hurdles? Just what is the nature of mining in the USA today? So wonderful discussion with Hugh Agro as our feature content. But before we finish this intro, though, just a few headlines. This is Bloomberg News via mining.com. Copper price touches $10,000 again as Goldman sees stockout risk. And if we scroll down a few paragraphs, Nicholas Snowden, Goldman Sachs, said, quote, "We continue to forecast a shift into open-ended and mounting metal deficits from 2024 onwards. There's potential for a quote-unquote stockout episode in which inventories run extremely low by the fourth quarter." So that is quite a statement there as well. Again, I like to ask the unaskable question, as I did last week to Roberta, a difficult question. What happens when we run out? The theory is, well, the price goes higher and then more supply comes online. But in a desperate situation, I wonder to myself if this is actually an assumption. But maybe that is just my overheated imagination here. As I see all of these headlines and just a few more, copper price above $10,000 as supply worries counter faltering demand. Bloomberg News via mining.com. Prices of copper have risen 17% this year. Look at all the excitement on only 17%. Now, that was published on May 10th, and we're on May 14th here, so we may be a little higher than when that article was written. A few other headlines. Chile copper output edges down in March, dragged by Codelco. Codelco is still struggling with output sliding 10% in March. That was Reuters via mining.com on May 10th. And also an update on First Quantum's Cobre Panama mine, and Panama president-elect rules out First Quantum talks until arbitration dropped. This is Reuters via mining.com. So they're not going to talk about anything until the arbitration talks are suspended. Molino said, quote, "To consider talking about mining, those arbitrations need to be suspended. Don't forget that the owner of that concession is the state," end quote. So again, it's sort of like, you guys can have all the arbitrations you want. That's in our country, and we are not just going to let anybody do anything with it. You know, it makes you wonder if First Quantum won that battle, if Panama would comply, is kind of a underlying question in that statement. Just a couple more headlines. Indonesia says it will extend copper export permits for Freeport and Amman. So this is Reuters via mining.com. There was a question on whether Freeport would be able to export its copper concentrates because the refinery was not yet completed for June. And so it looks like Indonesia will extend the permits to export copper concentrate, probably wanting to take advantage of these prices. Moving to the DRC just very quickly as we wrap up our intro here. So we've been following this battle in the eastern DRC, which doesn't look like it's slowing down at all. And just an interesting headline here, again from Africa Intelligence, Kinshasa to acquire 6 new Chinese attack drones. The DRC, Democratic Republic of Congo, has taken delivery, albeit with some delay, of a second batch of 3 Chinese CH-4 offensive drones for transfer to the theater of operations against the M23 and the Rwanda Defense Force in the east of the country. There are more expected in the coming months. So Kind of an interesting development. You see where geopolitics meets natural resources here, because China has some pretty big interests with Ivanhoe Mines' Kamoa-Kakula mine there in the Democratic Republic of Congo. So probably happy to support the DRC. Also, they have, I'm sure, an interest in the coltan that's in the eastern DRC, which is directly where the fighting is. So only 6 drones, but I would argue this is significant to see a Chinese military contribution to this situation. And another story, this is Deutsche Welle, DW.com, can SADC, South African Development Community troops, defeat M23 rebels? And just the subheadline, troops from the South African Development Community deployed to Eastern Democratic Republic of Congo are struggling to restore peace and security to the rest of region. And allafrica.com with the headline, Bold African Union Role Needed to Stabilize East DRC. And the Financial Times also had a big article on the tragedy of Congo's quote-unquote forgotten war, a horrific story, actually. Congo's forgotten war becomes a fight for survival. Battle for city of Goma pits government forces and allied militia against Rwandan-backed M23 rebel groups. So FT not mincing words on whether they think Rwanda backs M23, interestingly. And let's not forget the EU, as it is criticizing Rwanda's alleged support of M23, is meanwhile making mineral deals with Rwanda. As a columnist from Al Jazeera was pointing out, we talked about that article last week. Final headlines here. Canada wants to boost munition lines with critical minerals expansion. This is defensenews.com. This was sent to me by a listener. Thank you, Andrew. Canada is seeking to increase its munition stockpiles amid shortages highlighted by the war in Ukraine. And we have a quote from Canadian Defense Minister Bill Blair, who told Defense News Monday at a Defense Writers Group event in Washington, quote, "We have an increasing dependence on Chinese critical minerals. Certainly in my country, we have actually a lot of those assets in the ground, but we have to extract them and we have to process them." I think people have been saying in the mining industry for over a decade that we need to do this. I think James Steins, rest in peace, has been saying that since 2011. The quote continues, "Canada can be helpful to our allies by actually creating a viable source of some of those critical minerals. And if we work very closely with our allies, we can secure broadly what we all will need in the future, and we won't be potentially disadvantaged by an adversary." And finally, miners seek exemption from Canadian tax hike to save equity deals. This is Bloomberg News, and it discusses how the new budget could, quote unquote, significantly reduce the value of the Mineral Exploration Tax Credit, or METC, which is designed to help companies raise money to explore for critical minerals like copper, nickel, and lithium, according to the Mining Association of Canada. So it seems like the finance minister should be talking to the defense minister, because you can't have it both ways, where we're going to dig for these metals, but we're not going to provide a financial environment that makes it possible. If you want to find us online, you can find us at northernminer.com. You can find us on Twitter at northernminer, and on Instagram at the Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Ken Conkin, President and CEO of Tudor Gold, for this week's CEO Spotlight. Joining us today, I'm very pleased to welcome, I think for the first time, to the Northern Miner podcast for this week's CEO Spotlight, Ken Conkin, President and CEO of Tudor Gold. Ken, welcome to the show.
Hey, Adrian, thanks for inviting me. It's great to touch base with you again.
Well, it's wonderful to have you. And have you ever been on the Northern Miner podcast?
I don't think I've done the podcast, but I did the symposium in London. I was a speaker on the podium there, and that was a great experience. Thank you for inviting us. That was a good event. We enjoyed that.
Yeah, I'm a big fan of the symposium there in London. And so that is probably where we've met. So, Ken, for those that aren't familiar with Tudor Gold, could you give a little bit of background and just introduce the company to our listeners?
Yeah, essentially, it's an older project that's been around for quite a few years, but no real discovery. We're located in the heart of the Golden Triangle. And I cut my teeth at Bruce Jack Lake and Snowfields, and those two major discoveries, and this was always on my radar. So I was a ex-Silver Standard crossover to Pratium guy that was working with Bob Quartermain, Ken McNaught, and Joe Osnick on that discovery. So at the same time, Walter Storm, coming off of Osisko Lake at Malartic, was just wrapping that discovery up, and our paths crossed on Treaty Creek. So Treaty Creek is basically one of the largest new discoveries in the world, possibly the largest in 3 decades. So that's a pretty big, bold mission statement to fill out. But we're on the route of drilling off what's looking to be a beast. It's not at any way been constrained or cut off yet. It's still open. 180 drill holes, only 2 misses that did not make the resource on that. One went down magmatic dike, another one just glanced up but couldn't control the deviation. But it's essentially on the trail from Bruce Jack Lake to the north and on the same trend of chain of those elephants at KSM that Seabridge is off to our immediate southwest. So it's a great, great project with huge upscale on not just a deposit at 27.9 million ounces and growing. Yes, 27.9 million ounces and growing. Encapsulated with one of the domains is 2.87 million pounds of copper. So phenomenal looking prospect on this one.
Amazing. So formerly with Silver Standard and Pretium, and now with Tudor Gold. So this, just to be clear then, this is a copper gold project. Is that correct?
Yeah, correctly. It's a gold, copper, silver porphyry system. So in that order of the abundance of value, there is gold dominant domains. But the interesting thing about this project, it does have a critical element component, which is the copper domain, the CS600, copper stream 600, very important. It behaves very well metallurgically. So
Mm.
it's one of the things we're concentrating on in the center. It's running about 0.3% copper in sulfide. So it's a very robust system that has grades getting greater at depth. So it is a very, I think, important element coming forward in the British Columbian mandate to put copper front and center.
Excellent. And this is the Treaty Creek project, correct?
Correct. Treaty Creek directly on trend, again on that set of thrusts off of the KSM, the Kerr, the Mitchell, the sulfurettes, the iron cap, and now they've agglomerated my old snowfields, which has now been renamed as Mitchell East. So all of those frequencies and occurrences of deposits were directly online to that.
Okay, excellent. And what made you think that something was there? Like, did you see a similarity or did you see a kind of trend of sorts from Bruce Jack? Like, what made you think that something was there?
Oddly enough, it was a discovery of mine I'd made back in '87. It's called Konkin Gold and Konkin North. So one was a fairly high grade apophyse of a system. And I've gone back in my career and looked at projects that should have really taken off but didn't. And this was front and center. One of the other ones was a find of the Bruce Jack style mineralization. We'd hit a very high grade gold intercept in that gold camp that later on turned out to be basically the Bruce Jack Lake discovery. Along the lines of that, after drilling off snowfields, I recognized I just happened to be in the Treaty Creek on 2018 doing an audit for a checkup for Teuton Resources, which is the underlying owner of the claims that we've actually are joint ventured with, asked me to look at it. Well, when I saw one drill hole, I saw what was identical to what I'd seen at snowfields. But the big takeaway from all this is I had to travel 40 years of around the globe looking at distribution and frequency along that very predictable rhythmic distribution that you see at, for example, Yanacocha. Every X amount of meters, you'll see a deposit, just like spider bites in a line, or like an easier example would be the Hawaiian Islands. They're like plumes and pops that come up in the plume. Well, likewise, there was that exact 2.5 kilometer synergy that I recognized that when the guys were drilling in 2018, they were just off the mark. They hadn't quite yet gotten it. They just grazed the side of it. So I knew had we turned the drills around the other way, we would have hit the center of mass eventually. And we're still chasing that. We are still after the biggest part of the system. It's amazing. A 4 year odyssey, and we're still on discovery. We haven't closed it off. So, yes, to answer that question, yeah, seeing that frequency and distribution in gold country, big gold country, giant elephant country, and then come back to my backyard to apply that with rock textures, identical mineralization that was very obvious what happened at Snowfields was the same thing happening at Goldstorm for sure.
Okay, very interesting. And so, where are you in this process then? Like, I assume you've just done a lot of drilling so far. And what about the permits? Where are you in the whole kind of process?
Yeah, that's a great one. I mean, I predicted initially to a lot of the initial shareholders that this would not be drug out. We'd have it curtailed in 4 years. Well, this thing is eclipsed in size. This is going to be the fifth year, but I think we've got it cornered. I think we've got the source in our crosshairs. We're going after the highest grade components, and something that came out of our analysis is a high grade event. Now, keep in mind, when we were actually after Brucejack, we weren't after a high grade gold mine underground target at all. We were after a bulk tonnage deposit of better grades than we saw at, say, Snowfields. And those grades were up to 1 gram in places. They're very cow has a very good 2 gram component, but it's only limited to about 3 million ounces. So we were after something of that nature at Brucejack. So ironically, we tripped into Valley of the Kings, and I gave it that name in 2010 after we needed an acronym, so I came up with VOK. It was a great acronym. It stuck, and the rest is history. I mean, we came up with 7.7 million ounces of, got later graded back to near 8 grams. We started out with 14 grams as an underground target, but the cutoff is 6, so it's tight. It's a tight constraint up down on the cutoff. So what we've just done is done it similarly, been chasing this large porphyry target, but we just tripped into, like history is repeating itself, another high grade event called Supercell. And that thing has up to 4.5 meters of 20-gram gold in it, fine grained, peppered, feathered, dusted through native gold in a breccia, a nice hydrothermal breccia, very similar to what we see at, say, Brucejack. But this is native gold. This is not electrum, all native gold. And it's an interesting thing because we didn't include any of this in our resource. Our last resource update came in at 1.19 gold equivalent of 27.9 million ounces of gold equivalent. So you're approaching 30 million ounces of gold equivalent now, with arguably what will probably be over 3 billion pounds of copper, near 3.5 billion pounds of copper. So when you have that kind of high grade component staring at you, you definitely have 3 holes that pierce that plane. That gives it now a target. So that's on the books of this year. So this is what I'm kind of giving a segue to, is what we will be doing.
Okay, perfect. And just the fact that you came up with the name Valley of the Kings, and I love the historical reference. You could be a guest on the podcast for that alone, Ken. So that is
It's a
that
story.
is
It's a funny story, actually. Yeah,
you will. We might have to do that then.
we'll do it
So
a separate
okay,
one. We'll save that for another one. Yeah.
I would love to do that, Ken. The story of Pretium. Something
Yep.
like that would be unbelievable. Maybe a summer show. That would be
Sure.
beautiful.
Yeah.
Beautiful. Okay, so as we're wrapping up here, then a couple of questions in one, which is where is this going? Like, what's the roadmap here? And if you can wrap it up in, what is your message to investors on this project? What's the big takeaway for them?
Well, currently we're trading under $1, which is absolutely a gift in my mind. You've got this obscure, clean road to what will be a PEA, a preliminary economic assessment. So we're doing all critical elements, including all of our baseline studies have been completed to get us to that stage. We hope that we want to have and we're never going to call it a final resource, for Pete's sake, because we're never going to get to the end of this thing. It just keeps on going. However, we will get to what I'm comfortable with, a final curtain of holes to know where to bring infrastructure in, that we're not going to put ramp in the middle of, say, a high grade zone and sterilize that. So it's equally important you know where to put infrastructure for something like this. So this deposit has been turned into a very large underground sublevel block cave style target from a mega pit. So permitting should be easier. It should be a lot easier on the capex, on sustainability at the end, sustainability for in perpetuity that you have to have with big pits. Something like this will go forward, I think, much more easily. But the big takeaway is these drill holes are after 6 million ounces of much higher grade, 1.25. If we can sweeten that final ounce count for the final internal rate of return, all this language is based to go to, say, the first PEA, then we'll gradually seamlessly go to a pre-fees and feasibility. So we want to fast track it. So the exploration took a year longer than I thought it would, just because of size. But the big takeaway is look for head and heart shots only, high grade, high grade, high grade. Trying to sweeten this thing up to get it to the best looking internal rate of return.
Ken Conkin, President and CEO of Tudor Gold, thank you for joining us and sharing all of this wonderful information on this week's CEO Spotlight.
Thank you so much. I look forward to our next chat.
And thank you to Tudor Gold for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, Anglo American rejects BHP's revised $43 billion proposal. This is by a staff writer at mining.com. Anglo American rejected on Monday BHP's latest takeover bid, which valued the company at $42.7 billion, stating it was, quote, highly unattractive, end quote, for its shareholders. The new offer, received on May 7th, was 10% higher than BHP's first one, representing a 15% increase in the merger exchange ratio. The rejected bid would have lifted Anglo American shareholders' aggregate ownership in the combined group to 16.6% from 14.8% in the earlier proposal. And we have a quote from Anglo American, who said in a statement, quote, the latest proposal continues to contemplate a structure which the board believes is highly unattractive for Anglo American shareholders, given the uncertainty and complexity inherent and the significant execution risks, end quote. The revised bid was still contingent upon Anglo selling its shares in iron ore and platinum assets in South Africa. A merger would grant BHP approximately 10% of global copper production, enhancing its presence in leading copper-producing nations such as Chile and Peru. In acquiring Anglo American, BHP would secure ownership in 4 of the world's largest copper mines, Collahuasi, Los Bronces, El Soldado, and Quellaveco. This move would increase the company's copper exposure by approximately 40%. And we have a quote from BHP CEO Mike Henry, who said in a statement, quote, we are disappointed that this second proposal has been rejected. BHP continues to believe that a combination of the two businesses would deliver significant value for all shareholders, end quote. And we have a quote from Ben Davis, an analyst at Liberum, quote, BHP wants the prize, but is not willing to take on the execution risk. They're hoping that Anglo shareholders are frustrated enough with management that they pressure them to go for this, end quote. Again, this seems like such a complex, ambitious deal that Mike Henry is trying to pull off. Like, did he really think that it would go through with a 10 to 15% premium? So this statement here by Ben Davis, the analyst, kind of rings true from over here. And here's another story, Bloomberg News via mining.com. Anglo investors tell company to move faster to survive BHP bid. Anglo American shareholders are pushing the company to speed up the release of its turnaround plan as the 107-year-old miner seeks to present an alternative to BHP Group's takeover bid. And maybe, again, this is to Ben Davis's point, one imagines there is a lot of shareholder frustration, and now they're pushing the company to speed up its turnaround plan. Anglo has been reviewing its business since mid-2023, looking at every mine in its portfolio to help reshape a company that's fallen behind competitors in recent years. Yet that process was broadsided by a takeover approach last month from the world's biggest miner. Now Anglo shareholders have been urging the company to expedite that analysis and explain to investors how it would create more value than by just selling to the rival. According to conversations with 5 of Anglo's biggest holders, who asked not to be identified as the discussions are private, Anglo may unveil the strategy as soon as this coming week when the world's top mining bosses attend Bank of America's annual conference in Miami, according to people familiar with the matter. Still, the situation remains fluid, and Anglo is weighing the best time to show its hand, with BHP expected to return with a fresh bid, and activist investor Elliott Investment Management, which has emerged as one of Anglo's biggest shareholders, potentially planning to make its views public too. An Anglo spokesman declined to comment. So that was written on May 11th, and Anglo American's rejection of the BHP's revised bid came on May 13th. So continuing on, this is from May 9th. Anglo American South Africa investors open to improved BHP bid. So that is interesting. And this was reported by the FT, but this is Reuters via mining.com, reporting on an article in the Financial Times, suggesting that South African shareholders are open to a takeover offer from BHP, one assumes if the price is right. Continuing on, BHP Anglo American deal raises alarm in Japan's steel industry. This is Reuters via mining.com. And it says here, Japanese steelmakers have raised concerns with Australian authorities that BHP Group could become too dominant in the global supply of coking coal if it goes ahead with a takeover of Anglo American. Australia is the world's biggest exporter of coking coal and top supplier to Japan, making up around 60% of its imports, with most of the steelmaking ingredients coming from the state of Queensland, where BHP and Anglo American are the two largest producers. And we have a quote from JFE Steel spokesman who said, quote, BHP already has a large share of the supply of high-quality hard coking coal in the seaborne trade, and we will take measures to ensure that further oligopolization will not impede sound price formation and stable supply. So JFE Steel spokesman is concerned about an oligopoly within the coking coal industry. Very interesting. Another headline, Rio Tinto has not ruled out a bid for Anglo American, according to a report. This is by Cecilia Jamasmi at mining.com. Rio Tinto reportedly considered a bid for Anglo American in recent months, and the world's second largest miner has not dismissed the possibility of acquiring a portion or the entirety of the company, now a target of BHP. According to the Australian Financial Review, Rio Tinto's management, quote, has not ruled out making a play for part or all of the mining group and continues to study the day-to-day situation, end quote. Very interesting. Another headline, South African unions urge Anglo holders to reject BHP bid. This is Bloomberg News via mining.com. South Africa's biggest labor union federation urged local shareholders, including the powerful Public Investment Corporation, to oppose BHP Group's bid to buy Anglo American. The Congress of South African Trade Unions, which includes the National Union of Mine Workers among its members, said a deal wouldn't be in the national interest. South African shareholders hold about 26% of Anglo, with the PLC owning 8.5%, according to data compiled by Bloomberg. And again, let's not forget there is an election in South Africa, which surely is complicating this entire matter. And a couple of more headlines on this story. BHP insists Anglo American South African assets must go in any takeover. This is Reuters via mining.com. Back on May 7th, so a week ago, BHP was saying that Anglo American has to divest its South African assets. Now today, as I open with that Javier Blas tweet, which is actually now a story on CNBC, they are starting to divest certain assets, including the diamonds in Botswana, which is where I'm going next. Botswana vows to protect interests in potential BHP Anglo deal. This is Bloomberg News via mining.com. I mean, if Mike Henry gets this through, it will be quite a heroic move for a CEO. I mean, it feels overambitious with all of the stakeholders involved here. In a sense, if Mike Henry can pull this off and get everybody on side to basically allow this, maybe he should then be running Anglo American's copper mines, because that would show a high level of competence, one imagines. So here is Botswana. Botswana President Mokgweetsi Masisi vowed to protect the country's interests, including its 15% stake in diamond giant De Beers, should BHP Group acquire Anglo American. And here is a quote from the president. Quote, no way would we allow ourselves to willingly be made redundant or irrelevant, so Botswana will respond in ways that are protective of its interests, end quote. Botswana's concerns potentially add to the swath of challenges that BHP Chief Executive Officer Mike Henry faces in pulling off an ambitious but complex deal. Those are really the two words, aren't they? Ambitious and complex. Antitrust authorities from China to South Africa and Japan are likely to scrutinize an acquisition that would create the world's biggest copper producer. So that is your update on BHP and Anglo American. Now let's turn to other stories. Mexico eliminates aluminum import tariffs to combat shortage. Bloomberg News via mining.com. Mexico removed a tariff on aluminum imports from countries with which it does not have a trade agreement amid shortages of the material for the auto and electronics industries. The nation eliminated tariffs of as much as 35% on the metal that have been in place since late April, according to a decree published Wednesday. So these tariffs only went in late April and have already been eliminated? The fees had been part of a set of broader tariffs imposed amid concerns about cheap imports from China and elsewhere. I mean, if I understand this right, the tariffs were put in place in late April, and in mid-May, they have already been removed. That is pretty wild. I'll just repeat that last line. The fees had been part of a set of broader tariffs imposed amid concerns about cheap imports from China and elsewhere. The government explained the decision by saying that there was no national production of either raw, unalloyed, or alloyed aluminum. Quote, availability of said merchandise in countries with which Mexico has signed an international treaty on trade matters is insufficient to satisfy the supply of the automotive industries, auto parts, and electronics, among others, end quote, it said in the decree. I mean, I think this is what it's going to come down to in the end. Everybody can legislate all the tariffs in the world. But if there is no aluminum in your country, there is no aluminum in your country. And one could argue, is this foreshadowing of what could happen with copper? So turning to our next story, we're seeing major trading houses were trying to game the sanctions on Russian aluminum with some complicated storage strategy. We have an update. This is Reuters via mining.com. LME checks Russian aluminum play, but is it game over? And it says here the London Metal Exchange's warning shot to those looking to game the new sanctions on Russian aluminum appears to have worked, for now at least. Traders swooped on the LME stocks of Russian brand aluminum after the US and UK governments banned exchanges from taking delivery of Russian metal produced after April 12th. I mean, the timing of this, when you look at that story from Mexico, I'll tell you the question that's hovering at the back of my mind, maybe it's the back of your mind too, is do the politicians really understand the impact that this could have on the supplies of metals coming into their country? That is the kind of open question I have. And looking at that Mexico story we just saw, it would suggest that at least in Mexico, if I interpreted that story correctly, it's a little ambiguous, the wording, that they actually didn't anticipate it and actually had to do a quick turnaround, if I understood that article correctly. Continuing with the LME trader story, over half of registered tonnage was canceled over the ensuing week, destined for a creative runaround that would see it re-warranted under more restrictive trading conditions and locked into a lucrative rent-sharing warehouse deal. A significant amount of the canceled stock was moved back onto the LME warrant last week after the exchange tweaked its new rules around Russian metal delivery. So it looks like that trade is at an end. So that was on May 7th, and then we have this headline on May 10th, Reuters via mining.com. Trafigura delivers large amounts of aluminum to LME for lucrative rent deals. Commodity trader Trafigura delivered more than 400,000 metric tons of aluminum to the LME warehouses for lucrative financial deals, three sources familiar with the matters told Reuters, explaining a hefty jump in stocks. The so-called rent deals allow LME-approved warehouses to share fees with companies that deliver metal to them. Companies that deliver aluminum for rent deals do not have to retain ownership of the metal, but can get a share of the rent paid by the new owners for as long as the metal stays in that warehouse. So it all sounds very complicated, doesn't it? Trafigura and the LME declined to comment. Finally, total aluminum stocks in LME warehouses climbed 88%. From 424,000 tons to 904,000 tons on Thursday, the highest level since January 2022. The delivery of 425,000 tons to Port Klang drove the jump. Two sources said the aluminum delivered to LME warehouses was of Indian origin and that there was potentially another 400,000 tons of aluminum waiting in Port Klang for delivery to LME warehouses. One source said aluminum originating in Russia could be in the mix. So who knows what's going on there, but that story seems to be really looking at the underlying system of this metal moving around. Quite an interesting story. If it continues, we're going to have to learn more about what it actually all means. A few headlines here as we wrap up. Indonesia says nickel reserves enough for expansion. Despite moratorium calls, this is Reuters via mining.com. So Indonesia are talking about expansion. After being accused of completely flooding the market, Indonesia's nickel reserves are sufficient for expanded processing operations, an investment ministry official said on Wednesday, amid calls from a miners group to curb construction of new smelters to ease a global glut. Now, interestingly, the Indonesia Nickel Miners Association has urged the government to impose a moratorium on new pyrometallurgy plants to extend the lifetime of high-grade reserves, according to its Secretary General, Mady Katrin Lengke. Indonesia's high-grade ore reserves may be depleted in about 6 years, according to Indonesia Nickel Miners Association. And Mady Katrin Lengke said, quote, "We need to stop it, but maybe we need to wait for the new government," end quote. She said on Wednesday, adding that domestic processing ore consumption will rise 34% this year. Interesting. apparently there are concerns about long-term nickel supply in Indonesia. Another headline here, Philippines eyes boost to nickel processing capacity. This is Reuters via mining.com. And we're seeing that the Mineral Security Partnership has been trying to help the Philippines become a major producer of nickel. The Philippines said on Friday it aimed to add 3 more processing plants in the effort to develop a downstream industry for its abundant nickel resources after nations such as China and the United States expressed interest in the mining sector. Australia, Britain, Canada, and European Union nations had also shown interest in the Philippines, according to Environment Minister Maria Antonia Yulo Loizaga. And she said to a briefing, quote, "We do wish we were part of the value chain rather than just the supply chain. We want to be able to foster an environment that will encourage investments in processing by making sure we're able to facilitate extraction in a responsible way." So another country that simply does not want to send out its ore to the wider world, it wants to make the batteries at home or whatever the product might be. Another headline, France backs nickel refinery project to bolster battery supply chain. This is Reuters via mining.com. And the French government on Monday promoted a private sector plan to develop a nickel and cobalt refinery near Bordeaux to reinforce the country's supply chain for electric vehicle batteries and reduce its reliance on China. That is quite something. So interesting to see there. And just a few more headlines. Chile truckers protest rising crime in threat to mine transport. This is Bloomberg News via mining.com. Truck drivers in Chile staged protest Monday in the mineral-rich north of the country and around the capital Santiago, demanding greater safety amid an uptick in violent crime. So they are probably legitimately concerned that they are becoming the target if they are carrying these raw materials. Continuing on, Ganfeng seeks full control of a lithium mine in Mali for only $408 million. China's Ganfeng Lithium Group plans to buy out its partner in a lithium mine being developed in Mali. And just a couple of headlines on platinum and palladium. Platinum, palladium, rhodium prices seen down in 2024 despite deficit, Metals Focus says. So that story is by Reuters, and you can find it on mining.com. And I believe Metals Focus is the partner of the LME that has been concerned with green metals, the testing ground seemingly. Another headline, platinum set for biggest deficit in a decade in 2024, says Johnson Matthey. It's Reuters via mining.com. And here's another platinum headline, platinum shortage to persist as EVs slow down fuels demand. So not as many EVs being sold as expected, so a demand for platinum has resurged. And final headline here, China's central bank adds more golds to its reserves in April. You can find the whole story courtesy of Reuters on mining.com. Across the board, a demand for metals. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.48%. That is almost even. It is 0.02% higher than last week. The UK 10-year gilt is yielding 4.16%, just edging 0.01% higher than last week. And the Italy 10-year bond is yielding 3.86%. That is 0.1% higher than last week. So 10-year bonds edging oh so slightly higher. Turning to precious metals, gold is trading at $2,352.80 per ounce. That is $30 higher than last week. Silver is trading at $28.68 per ounce. That is $1.23 higher than last week. And platinum is trading at $1,010.10 per ounce. That is $45 higher than last week. And palladium is trading at $966 even, and that is $10 higher than last week. So platinum making a nice move, silver having a stronger move than gold. And so interesting development there. Turning to our industrial metals, copper is trading at $4.76 per pound. That is 13 cents higher than last week, continuing its climb Iron ore is at $116.93 per metric ton. That is $2 lower than last week. Aluminum is even at $1.16 per pound. Lead is at $1.02 per pound. That is a penny higher than last week. Nickel is at $8.70 per pound. That is 3 cents lower than last week, but almost even. Tin is slightly higher at $14.56 per pound. That is 5 cents higher than last week. Cobalt is unchanged at $12.62 per pound. Lithium is at $15.14 per kilogram. That is 17 cents lower than last week and still going sideways with that $15 handle. Uranium is trading at $92.25 per pound. That is 15 cents lower than last week, so basically even on the week. And zinc, what I continue to think is a dark horse here, at $1.36 per pound. That is 4 cents higher than last week. Looking strong. Not often talked about, but really showing some strength here. And so zooming out, metals trade sideways with individual stories standing out, particularly silver, platinum, copper, and zinc. And those are your metal prices. Coming up, I'm very pleased to welcome to the show Hugh Agro, President and CEO of Revival Gold, to discuss mining in the United States. I asked Hugh to come on to give a boots-on-the-ground perspective of what it is like to run a mining company in Idaho. I asked him about the viability of the TSX Venture Exchange, which I think is becoming a bigger and bigger issue. We didn't even have time to go into it, but this idea that Total wants to move out of France to the U.S. Stock Exchange. Some people say the reason that Anglo American had low valuations is because it was on the London Stock Exchange. I wonder to myself, is the venture also an issue, contributing to low valuations in a world of ETFs? Anyways, we get into all of it, including new mining legislation in the U.S., supply chains, and more. So I hope you enjoy the conversation, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the show Hugh Agro, President and CEO of Revival Gold. Hugh, how are things going?
Oh, it's great to be back with you, Adrian. Thank you for having me.
It's a pleasure to have you. I mean, you're located in such an interesting part of the world in the United States with your project. So before we get into the nature of working in the mining industry in the United States, maybe we could go even bigger picture here. We've had a run in gold and copper, and we're seeing just a little bit of the animal spirits, just a hint of the animal spirits. The stocks are starting to move a little bit. What are you seeing on your side? What kind of observations are you seeing as a veteran of the industry?
Well, yeah, I'd say we've got a quiet bull market in the precious metal equities happening. I think 2 or 3 months ago, we couldn't say that. And I know it's been a tough 10 or 12 years for those of us invested in particular in the junior space, but it's starting to move. We're seeing the gold equities up 30, 40%, some more on the back of this move in the gold price, up about 15% this year. Gold's definitely doing what it's supposed to do. We're seeing long-term trend has been up, even the shorter term up. The equities have languished, I think, probably because of the general disfavor for small cap names that we're seeing in the market and this clamor for momentum in the bigger cap names. But there's a quiet bull run on the move here.
I love how you put that, a quiet bull run. And so as someone that runs a mining company, are you finding that there is more interest then in people that want to, invest in the company? Or by quiet bull run, are you saying, it's kind of flying under the radar and not much is changing other than the price?
What I mean by that is we're seeing the senior gold companies move. Newmont put out their quarter. I think they had operating cash flow of $1.4 billion. Kinross put out their quarter. They had EPS running at 50% higher than expectations. And even the lowly GDXJ is up about 33% or thereabouts this year. So we're seeing it in the bigger cap names and some of the indexes. Hasn't yet trickled down to the developers or the explorers for the most part. So that's what I mean by a quiet bull run. And this is not unusual, right? We usually see the big cap names move first, and then the money starts to move into the smaller cap sector.
And as far as metals are concerned, like where are you seeing the most excitement or movement, shall we say, in the metals? Like, is it gold primarily and then maybe silver, and copper seems to have been getting some momentum? Like, is there any metal that really has captured your attention right now?
I got to admit to being biased. I'm a gold guy, but boy, I love that copper move. And of course, the intensity in the electrification transition of the economy to a more electrified economy. I think that's an important theme. What I love about what we're seeing in the gold industry, though, is that we're really growing the numbers of people, banks, central banks that are taking on the metal when we shift from west to east. And we're seeing a lot of buying out of China, obviously, not just central bank buying, but also retail buying of individuals, trading activity increasing. And so we broaden out the base of individuals that are consuming gold. And I think that's good for the gold market in the long run.
It is a reoccurring story we're hearing of the strength in buying out of China. And just finally on this like very big picture here, you're doing some traveling right now. Like, what are other people saying? Are you going to many gold conferences or many metals conferences right now?
We are, of course, out, every week with folks in one form or another. Either it's conferences or we're hosting site visits or we're in offices meeting with folks, both investors, and we've just completed a large institutional equity financing, but also with corporates. And I'd say the mood is cautiously optimistic. One of the signs that I look for is from these corporate development teams. I like to see them out looking at things and thinking constructively rather than hiding under their desks and afraid to approach their investors, their boards of directors with M&A ideas, investment ideas for the sector. I mean, this is an industry that is a very large and growing gap between the pace of production running at 120 million ounces a year and the pace of discovery, let alone permitting and construction, running at about 10 to 20 million ounces a year. So that's a big gap. And there's been a serious underinvestment, not just in growth projects, but in sustaining capital and in technology around the business. And I think as these larger cap companies generate more free cash flow and the emphasis shifts from, how do we return that cash flow to investors to how do we sustain our businesses, we are going to see a shift in enthusiasm for growth. And so that's good for the business. It's good for the smaller cap explorer developers.
So this is very interesting and topical, this kind of gap between the pipeline of projects coming in and what may be required, particularly, copper, of course, gets a lot of attention in that regard. Your Bear Track Arnett Gold Project is based in Idaho in the United States. And of course, the United States is trying to reshore their supply chain or, include friendly countries. What's your perspective on how this is all going?
The recognition from governments that domestic sources of supply are strategic is welcome. In Canada, in the US, in other parts of the world, some are better at it than others, but it's certainly welcome here in North America. The devil's in the details of the execution. And I think what industry would like to see is policy moves that reflect that recognition of the strategic importance of domestic metal production. It underpins all of the other industries and the defense of a nation, the ability to produce metals domestically. And I'm not just talking about, copper and some of these more esoteric commodities, but also gold, because it's important to underpin one's financial system with that globally recognized metal with 5,000-year history of doing just that. So I think this is all welcome. The devil's in the details. You asked me about the United States. I mean, we've seen some pluses and some minuses. I know Trilogy has been struggling with some permitting up in Alaska around their project and some of the government moves there. That's unwelcome. I know they've got a super team there and we'll work through that. In the lower 48, we've seen a couple of things that have been more positive, in particular in the state of Idaho, where Revival Gold is working. We've got now Perpetua with a $1.3 billion loan from the U.S. government to help advance their stibnite project, which, of course, is a gold project with a antimony credit, which is of benefit to the U.S. defense industry. There have been some other developments. More recently, We've had the House approve the Mining Clarity Act, which is an important act to put some clarity to the position of waste rock on a mining site in a federal jurisdiction. This is to address some of the negative outcome from the Rosemont litigation, which some of your viewers may know about, Adrian, whereby Hudbay had some challenges permitting their copper project. We're optimistic that the Mining Clarity Act will get through Senate and that will be good for industry. So some positive developments in the U.S. We try and stick to parts of the world locally in the U.S. where mining has been done before and where the communities are in support of our activities. I think that's the easier route than to choose the more challenging locations. But it's nice to see both the regulation and some of the actions from the government in support of the domestic mining industry.
Okay, excellent. And how is this actually working in terms of the government giving a helping hand? Do they create a website and say, hey, if you have one of these minerals in your project, fill out this form and we'll get back to you in some kind of support? Like, do you know how this is working? Like, and because you're a gold project, are you included in this? How is this working?
It's very much a case-by-case basis. And the emphasis is on those strategic metals that are part of the transition economy. But what I would say is that it all is of benefit. We want a thriving domestic mining industry in the U.S. and in Canada, for that matter. It's good for our national security and for our industries and also for our economy. Let's not forget that. So the overall framework is moving in the right direction, I would say. Based on our experience, we're seeing a recognition that some of these regulations can be very cumbersome, fraught with litigation. Our own experience on our Bear Track Arnett project located in Idaho is that we can work through the federal system. We've been through 5 drill permitting exercises in the last 6 years, the last of which was a big effort, about 2.5, 3 years to complete that process of a EA and clear permitting for all of our drilling activity on the project. But it works, and we were not subject to litigation, and I think our team did a wonderful job, led by Pete Blakely and Opal Adams, on getting that permitting in place, and it works. So that's positive.
Okay, excellent. And I want to get to your project in a second, but I have one more question just on the mining code that you're mentioning. Clarify for listeners, what is the point of this legislation? You're mentioning something about waste rock. Is this designed to help push projects through and then create a way of dealing with the waste that there may have been concern with? Is that what's going on?
Yeah, that's it in a nutshell. But what's happened is, of course, when a company is mining a project, there's the actual mining of the mine area, and then there's the infrastructure and the storage areas for waste rock that need to be added to the mine plan. And there was litigation that was brought which challenged the ages-old idea of putting waste rock on mining claims that do not have minerals on them. And so the House has put through this Mining Regulation Clarity Act, which just clarifies that if a mining company owns mining claims, and they're mining in part of those claims, they may put waste rock on other claims that they have to facilitate the mining operation. I mean, it just doesn't make sense to do otherwise. One stakes a land position to accommodate the infrastructure and storage areas that one needs to operate a mine. And then at the end of the mine life, takes responsibility for reclaiming those areas and turning them back to public use. We are talking about public lands in this case. These are lands owned by the federal government and administered by the BLM or by the Forest Service. And so there's a responsibility to put those lands back to future uses. And it just makes sense that as part of a mining plan, one would be able to utilize mining claims to store waste. So the House is putting clarity to that to try and address some of the litigation that's challenged that age-old methodology and approach.
Right. And in theory, then maybe a project like Hudbay's copper project there might, as a result, be able to perhaps move forward. Is that the idea?
Yeah, that's the Rosemont project. I'm not familiar with the exact details of where that sits right now and whether this is going to impact it or whether they've already resolved it through the litigative process. But bottom line, we want less litigation. We want more regulation that is operative and does the job, but does it without creating ambiguity. And I think this legislation is a move in the right direction. And listen, my hats off to the AEMA, American Exploration and Mining Association, for their work with government agencies and with some of our more responsible senators and members of the House to get that legislation moving.
So just finally on this, then, it really is like a well-titled act. It's not going to turn the mining industry upside down or change everything. This really is to provide clarity where there's ambiguity and sometimes 150-year-old legislation.
Correct.
Okay, excellent. So you, of course, are president and CEO of Revival Gold. You're based in Idaho. So to get a little more granular here, then, how is working in Idaho on a state level, and how are things going at Revival Gold?
We're really pleased with our position in the state and the engagement with the state. Number one, the support for responsible exploration and mining from the community in which we're located, and also from state agencies. So we're really happy with that, and with our team. There's a real solid understanding that mining done responsibly is good for a community, good for a state, good for the nation. But we've taken it a step further, Adrian. We've just, in the last couple of weeks, announced the acquisition of a second project, which will take us into Utah, another very favorable state for responsible exploration and mining. Of course, you've got the big Bingham Canyon copper operation in the state of Utah on the edges of Salt Lake City. We're around the corner from that with our new project called Mercer. And this project brings another 1.6 million ounces of gold and resource to Revival, and a second heap leach development project to our portfolio.
Very interesting. So Idaho is good for work, and you're even including Utah now as part of the equation. So how do things look then with the company as far as where this is all going? Is the Bear Track Arnett Gold Project in Idaho still the flagship, and would that theoretically come online first? How do you see this all playing out in theory?
So there's not much theory about it. It's in practice. I've just got back from Utah this last week, and we're underway. Look, we've got a super engineering and development team led by John Meyer, our VP Engineering and Development, and our team is moving from the PFS work at Bear Track Arnett to the PEA process, preliminary economic assessment, at Mercer. So it's a rationalization for our team moving the engineering effort over while we progress permitting on Bear Track. And meanwhile, our exploration team, led by Steve Priestmeyer and Dan Pace, are busy with both advancing the exploration, where we've got an open deposit, 4.6 million ounces of total resources at Bear Track Arnett, and open targets there. And this new Carlin-type deposit in Utah at Mercer, and getting our minds around the potential there. So what we've really done is we've leveraged our team to bring in another project which is complementary and creates a staged approach to target 150,000 ounces a year of heap leach gold production. We'll start in that with the Mercer project because it's largely on private ground. And we were talking about some of the challenges earlier with public ground in the United States. It just takes longer to move through permitting. So one of the big attractions for us in acquiring the Mercer project from a private company was to move more quickly to production. And that's what Mercer will allow us to do. We will follow that up with the first phase of production from Bear Track Arnett. And then what we're envisioning beyond that could see us get to 250 or 300,000 ounces a year from underground potential at Bear Track. And so we've built for ourselves an organic pipeline of growth, phased growth, moving from initial production at Mercer in Utah to then the next phase at Bear Track Arnett, where we've got existing infrastructure to work from, and then lastly to develop to the underground. So really excited about this, and it's a leveraging of our team that's already underway.
Okay, excellent. It sounds very exciting. And so what are the biggest challenges then that you're facing in terms of, getting from point A to point B? For example, you hear often in the mining industry, there's not enough talent, or there's not enough, new geologists coming online? Is there equipment issues, maybe inflation, permitting, all sorts of things? As we know, that mining can be a difficult business. So what are the biggest challenges you're facing that if you could kind of wave a magic wand, they'd be taken care of?
I think the biggest challenge facing our industry, and it's not just at Revival Gold, but in the development exploration space, is long-term capital to support these businesses. The opportunity is clear. We talked about that earlier, this gap, 120 million ounces a year of gold production, and we're only finding, 10, 20 million ounces a year, let alone permitting and constructing future operations. So the opportunity is clear. There's a big gap. It's going to close. And the people are there, I would say. That's less of a challenge if you're working in the domestic United States with projects that are in communities in which people want to live, which is our choice and which is our situation. So we've got the people, we've got the projects. Now some 30,000 acres of claims in the Western U.S., making us a big player. And by resources, we're the third largest developer in the Western United States with a total of 6.2 million ounces of gold. And I think really the challenge is just to manage the funding so that we don't wind up in a situation where we've over-diluted the company or put ourselves in a precarious streaming or royalty transaction or debt situation. So I think the next phase for Revival Gold is all about building on what we have here, managing our balance sheet, and ensuring that we've got lots of upside for our equity holders who've been, let's face it, patient.
Sure. And, it's so interesting you bring up the long-term capital issue. I mean, of course, we had, I think it was Frank Giustra and Pierre Lassonde making the case that Canadian pension funds should be involved in supporting the mining industry. I mean, what do you think about that? Or do you have sort of similar kinds of ideas as to, maybe how things should be playing out to get that long-term money? Because it's a major problem.
Yeah, look, I think Mr. Lassonde and Mr. Giustra make a good argument for the benefits for the government of Canada to put regulations in place to promote our domestic industry. We are world leaders in Canada. Here we are, Revival Gold, listed in Canada, creating all kinds of jobs and an opportunity for Canadian businesses by developing projects in the Western United States, funded from around the world. Great example of that expertise being exported elsewhere in the world. And yeah, I think the Canadian government can be more supportive of that and recognize that there are so many follow-on benefits, secondary benefits that accrue to Canada as a result of our presence in the space. Not to mention, the strategic benefits for a growing country like Canada and having natural resources and the expertise to responsibly exploit them. So yeah, I'm supportive of those efforts called by some of our industry statesmen. Of course, we've got to make money for investors. So there's got to be a good reason why Ontario teachers and CPP invest in the mining industry. They want to make money, and so we've got to deliver that. And on the long term, I think that is absolutely positive. And we've seen how beneficial that has been to Australia, where those pension funds that are investing locally are making excellent returns for their investors, and where the benefits to having a domestic mining industry has accrued to not just those directly involved, but lots of other constituents.
And just a final question on this point as we wrap up here. Sometimes I wonder to myself, is it the TSX venture to a certain degree? Do you think that could be a factor here where maybe for whatever reasons, do you think the venture exchange could do more, or that there is an issue there, or do you think it's basically fine?
Look, my experience is that we've seen a real transition. This isn't just about the exchange. It isn't just about Canada, but the investment business has really changed. We've gone from brokers to financial managers. We've gone from stock pickers to ETF, passive, investment funds. We've gone from really diligent analysts looking at company-specific issues to programs that trade on momentum. And those things have really changed the industry, not just our industry and how we finance ourselves, but others too. And so we've got to adapt. And one of the ways we adapt at Revival Gold is to make ourselves more appealing to the bigger investing groups, those that are chasing scale, by becoming the third largest go-to name in the development space in the U.S., by building our market cap, by putting more resources into the business, By leveraging our team and creating something of greater consequence, I think we're responding to the way the industry has changed.
Hugh Agro, President and CEO of Revival Gold, thank you for joining us and sharing your insights on this week's Northern Miner podcast.
Thanks, Adrian.
Thank you once again to Tudor Gold for sponsoring this week's episode of the Northern Miner Podcast. Great to meet Ken again after the mining symposium in London. And thank you once again to Hugh Agro, President and CEO of Revival Gold, for joining us on what it's like to run a mining company in the United States in 2024. And thank you, dear listener, for tuning in once again. If you want to help out the podcast, please leave us a review in the Apple Podcast directory, share it with your friends, and until next week, take care.